It's Friday. Today we are asking, how can Venezuela be rich in oil and yet so poor on the streets? Short answer, huge reserves, tiny returns. Because of the collapsing production, corruption and sanctions and the weak institutions. Here's the full picture. Venezuela sits on the largest proven oil reserve on earth, roughly 300 plus billion barrels, more than any other country. That gives it enormous theoretical wealth on paper, yet turning that resource into broad prosperity has repeatedly failed, and the gap between reserve and public well-being is stark. Reserves matter only if you can extract and sell the oil. Production collapsed from multiple millions of barrels per day in the 1990s to under 1 million BPD in recent years. PDVSA reported production and export recovering towards about 0.9 to 1.1 million BPD in 2024-2025, but that is a fraction of past capacity. Years of underinvestment and equipment failures and skilled staff lost crippled output and output volatility means revenues and unreliable. Three linked failures explained why oil well did not translate into public goods. First, state capture and corruption. PDVSA and state coffers have been looted or mismanaged for years, diverting revenues away from investment and services. Second, sanctions and politics. US and secondary sanctions have restricted access to technology, finance and Western partners, complicating output recovery and foreign investment. Third, the policy choices. Nationalization, price control and erratic fiscal policy discouraged private investment and eroded institutional capacity. The human numbers are stark. Official and international data show poverty remains widespread. Recent World Bank and national briefs put overall poverty at roughly 30 to 32% and extreme poverty around 11 to 12% in 2024. After a decade of severe economic contractions and hyperinflation, public service, health and electricity, water are simply unreliable, and many Venezuelans depend on remittance or informal coping strategies. Political moves and shifting sanction policy make recovery fragile. Recent U.S. actions include revoking certain authorizations and canceling previous concessions, and these uncertain entry or exit of foreign firms change investments mad overnight. Even where production ticks up, much of the oil is extra heavy crude needing blending or costly processing, so revenue per barrel and net export value differs from lighter crudes. The bottom line, Venezuela's oil endowment is real, but resource endowments are not destiny. Without transparent institutions, sustained investments, and predictable legal and political environments, oil cannot deliver broad prosperity. Watch three things: oil sector investment deals, who invests and on what terms, sanction policy and licenses decisions, and whether revenue management reforms a stronger institution actual follows. That is your Friday deep dive. Want to know more insights? Follow Paperboy now.